Welcome to the channel, guys. When it comes to investing, many people feel overwhelmed and unsure of where to begin. The world of finance can seem complex and confusing, filled with unfamiliar terminology and endless options for where to put your money. However, the truth is that investing doesn't have to be complicated. In fact, with the right knowledge and approach, it can be an accessible and rewarding way to grow your wealth over time. That's why in this video, we're going to cover the basics of investing for beginners. We'll start by defining what investing is and why it's important, before diving into the different types of investments you can choose from. We'll also talk about how to get started with investing, including setting financial goals, creating a budget, and opening a brokerage account. Finally, we'll explore when the best time to start investing is and why it's never too early or too late to begin. Whether you're looking to save for retirement, buy a home, or achieve any other financial goal, investing can help you get there. So, if you're ready to learn more about the world of investing and how it can benefit you, keep watching. Investing is the act of committing money or resources to an asset or venture with the expectation of generating a profit or gaining some other type of return. Essentially, investing involves taking a calculated risk in the hopes of achieving a financial reward. There are many different types of investments, each with its own set of risks and rewards. Some common types of investments include stocks, bonds, mutual funds, exchange-traded funds, ETFs, real estate, commodities, and more. The type of investment that's right for you will depend on your financial goals, risk tolerance, and personal preferences. When you invest in an asset, you become a shareholder or owner in that asset. For example, if you buy a stock, you become a shareholder in the company that issued the stock. If the company performs well and its stock price increases, you could earn a profit on your investment. On the other hand, if the company performs poorly, your investment could lose value. It's important to remember that all investments come with some level of risk. There is no such thing as a completely risk-free investment. However, by doing your research, diversifying your portfolio, and staying informed about market trends, you can manage your risk and increase your chances of success. Investing can be a powerful tool for building wealth and achieving financial goals, but it's important to approach it with caution and discipline. By understanding the basics of investing and taking a long-term perspective, you can begin to grow your money and achieve financial security. There are many different types of investments available, each with its own unique set of characteristics, risks, and potential rewards. Stocks represent ownership in a publicly traded company. When you buy a stock, you become a shareholder and have a stake in the company's profits and losses. Stock prices can be volatile and are influenced by a wide range of factors, including the company's financial performance, industry trends, and global events. Bonds are debt securities issued by corporations, governments, and other organizations. When you buy a bond, you're essentially lending money to the issuer in exchange for regular interest payments and the return of your principal investment when the bond matures. Bonds are generally considered less risky than stocks, but also offer lower potential returns. A mutual fund is a type of investment vehicle that pools money from many investors to purchase a diversified portfolio of stocks, bonds, or other assets. By investing in a mutual fund, you can gain exposure to a broad range of investments with relatively low fees and a professional management team. An ETF is similar to a mutual fund, but trades like a stock on an exchange. ETFs are often designed to track a specific market index or sector, making them a convenient way to gain exposure to a particular area of the market. Real estate can be a valuable investment for those looking to build wealth over the long term. You can invest in real estate directly by purchasing a property or indirectly through a real estate investment trust, REIT. Commodities are physical goods like gold, oil, and agricultural products that can be traded on markets. Investing in commodities can be a way to diversify your portfolio and hedge against inflation. Getting started with investing can seem daunting, but it's actually quite straightforward. Before you begin investing, it's important to define your financial goals. This will help you determine how much money you need to save and how much risk you're willing to take on. For example, if your goal is to save for retirement, you'll need to calculate how much you'll need to save to reach that goal. Investing requires money, so it's important to create a budget that allows you to save and invest regularly. Look at your income and expenses to determine how much you can afford to set aside for investing each month. Once you have a budget in place, it's time to choose your investments. Consider your financial goals, risk tolerance, and time horizon when selecting investments. It's generally a good idea to diversify your portfolio by investing in a mix of stocks, bonds, and other assets. In order to buy and sell investments, you'll need to open a brokerage account. There are many online brokerage firms to choose from, each with their own fees and features. Compare different options and choose a brokerage that suits your needs. Once you have a brokerage account, you can begin making investments. Start small and gradually build up your portfolio over time. Remember to monitor your investments regularly and adjust your strategy as needed. It's important to note that investing involves risk and it's possible to lose money. It's important to do your research and make informed decisions when investing. If you're unsure about where to start, consider working with a financial advisor who can help guide you through the process. The best time to start investing is as early as possible. The power of compounding means that the earlier you start investing, the more time your money has to grow. For example, let's say you start investing $100 per month at age 25 and continue until age 65. Assuming an average annual return of 8%, your investment would grow to approximately $400,000 over that time period. However, if you wait until age 35 to start investing the same amount, your investment would only grow to around $190,000. That's a significant difference. Of course, it's never too late to start investing. Even if you're closer to retirement age, investing can still be a valuable tool for building wealth and achieving your financial goals. However, the earlier you start, the more time your money has to compound and grow. It's also important to remember that investing involves risk and it's possible to lose money. It's important to consider your financial goals and risk tolerance when deciding when to start investing. If you're unsure about where to start, consider working with a financial advisor who can help guide you through the process. Investing is an important tool for building wealth and achieving financial goals. There are many types of investments to choose from, including stocks, bonds, mutual funds, ETFs, real estate, and commodities. Before getting started, it's important to define your financial goals, create a budget, choose your investments, and open a brokerage account. It's also important to start investing as early as possible to take advantage of the power of compounding. Remember that investing involves risk, so it's important to do your research and make informed decisions. If you're unsure about where to start, consider working with a financial advisor who can help guide you through the process. With the right approach, investing can be a valuable tool for achieving financial security and building a brighter financial future. So guys, if you found this video helpful, be sure to subscribe to our channel for more informative content. Don't forget to hit the notification bell. Also, feel free to leave a comment below with any questions or feedback you may have. Thanks for watching, and we'll see you in the next video.